Just want to review a few important principles about bubbles since we are in the greatest one in history. And sometime later this year, early next year, it's going to crash, and bubbles crash hard when they do. Half the entire crash usually comes in the first 2 to 3 months, 40% or so. So how do we get this sale of a lifetime? That's the whole principle here. It's the greatest opportunity a business or an investor will see in a lifetime if you see it coming. Now, again, principle number one, cash is king when a bubble bursts because it's a great reset and everything goes down in value except the highest quality bonds and the best currencies like the US dollar in this era. Number two, for investors, the biggest principle is, yes, if you can get out near the top, preserve your capital in the great bubble, then you can buy at unprecedented prices at the bottom of the crash. That is the sale of a lifetime. And that's particularly applicable to investors, but it's also true for businesses. Businesses can buy assets of competitors at rock bottom prices. But the third principle that people don't always get as much for businesses and the economy overall, it's a great shakeout. It's going to take the businesses that are most focused and efficient and preserve them and eliminate the inefficient, less focused businesses. That's one of the biggest things that happen. That's why recessions all along, and say every 10 years or so, and depressions once in a lifetime are very important to the economy. And it's always debt bubbles that create financial asset bubbles, and that occurs in the fall bubble boom season. And of course, the deleveraging and these principles we're talking about occurs in the winter season. Now, of course, I always give the two classic examples because everybody knows them. Joe Kennedy makes money bootlegging business on the way up in the bubble and then sells his stocks and financial assets right near the top because shoeshine boys are telling him what to buy, and he knows this has got to be a top. And then rebuys at the bottom and just creates a family fortune, billions of dollars in today's terms out of like 100 million or something like that. In other words, just leverages the whole thing. He's the example of how an investor takes advantage of the sale of a lifetime. General Motors was the classic example of a business that was up and coming, but number two behind Ford in the great bubble. And then past Ford, they had better financial controls. They had better marketing product lines to satisfy the customer and survive. They passed Ford in the early 30s to become the number one company in the world and the number one company in autos for 4 decades to follow that into the 70s. But my favorite example, which really demonstrates the shakeout side as well, but both, cash is king as well, the mafia. And my favorite example in the bubble, again, what better high margin cash flow, take advantage of the bubble and the good time to be in than illegal booze. So they made huge profits in the bubble. And then with all that cash and cash flow, when things crashed, they didn't have their money invested in stocks and much and stuff. They used that money to become loan sharks in the shakeout when banks wouldn't loan even to decent businesses anymore. Banks clam up, they're in trouble. They have loans defaulting and going bad. So credit's hard. So what do? They lend out money at like 20% plus rates often. 20%. I mean, this is in a downturn where bonds are yielding a couple of percent. It's hard to get a yield on money, and businesses' profits are going down or negative. So they're making high cash flow. And think about this. For businesses that have loans, and you have a loan with the mafia and a loan with the bank, which one are you going to pay back first? Which one's going to be your priority when Luigi's going to come with a bat if you don't pay the mafia, okay? So they get higher payback rates. And even if those businesses with all that priority in Luigi's bat don't pay them back, guess what they get? They get to take over the assets of the business. They get to basically take over businesses at the bottom of a downturn in a shakeout, and the businesses that survive will turn around and boom for decades to come. So the mafia played it perfectly. Illegal, high profit, high growth businesses. I mean, what did better than booze in the roaring 20s when everybody was feeling rich and high and partying? And of course, booze was the chosen thing. And then they played the shakeout by becoming loan sharks with very high cash flow and taking over a lot of the businesses in the cities they operated in. So that's the best example. So think like that. As an investor, hey, we're saying it's still early yet. We still see this dark window blow-off rally coming. So far, the signs are fully behind that. And we'll know in the next few months whether that's still going to be the case, but it does look the case to me. But we get to near NASDAQ 10,000 or Dow 33,000, boy, it's time to either hedge very cheaply to protect yourself from that crash or get out of stocks and get into safe, high-quality bonds and cash-like investments and then buy in the downturn. And businesses, you hunker down now. You get focused. You sell off profit lines that aren't profitable to you or that you don't dominate to somebody that does and get cash flow, build cash flow and cut your expenses now, especially your overheads, build cash flow or preserve cash flow as much as you can, and then buy your competitors out and their assets at the bottom and gain massive market share. That's the big payoff. If you have 20% of your market, you may end up with 40% after this crash. And even if you lose money on the way down, if you just survive, that 40% market share is going to make you more profitable than ever for as far as the eye can see. So that's the opportunities in a sale of a lifetime.